Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions, and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
One insurance product sold in Japan costs exactly the same no matter which company sells it. Not a similar price, the identical yen amount, down to the last digit, everywhere you shop. For the most earthquake-exposed developed economy on the planet, that's not a coincidence. Second and final video in our insurance series, earthquake insurance, and whether it actually makes sense for foreign property owners to carry it. Earthquake insurance covers damage to your home and belongings from quakes, the fires they trigger, and the tsunamis that can follow. It can't be purchased on its own, it only exists as an add-on to a fire insurance policy you already hold. Here's the gap that catches people off guard. Standard fire insurance explicitly excludes fire damage caused by an earthquake. Without this add-on, a quake-triggered fire pays out nothing at all. There's also a hard ceiling. No matter how valuable your home is, the most you can insure a building for is 50 million yen, is almost equal to $307,882. Household belongings, furniture, electronics, appliances, are capped separately, at 10 million yen, is almost equal to $61,576. And neither cap is something you simply choose. Earthquake coverage can only be set at 30 to 50% of your fire insurance amount. You can't insure the full value of your home against earthquakes even if you wanted to. That structure is deliberate. Even a maximum payout was never designed to rebuild a house from scratch. It's meant to cover urgent living costs, temporary housing, and loan payments while you sort out the rest. Now, back to that identical pricing. Every insurer in Japan, big or small, foreign-owned or domestic, charges the exact rate the government approves for your prefecture and building type. There's zero room to shop around on price. The reason, earthquake insurance runs on a legally mandated no-loss, no-profit principle. Insurers aren't allowed to build in a profit margin. Premiums exist purely to fund payouts, backed by a government reinsurance pool capped at 12 trillion yen for a single earthquake. What you actually pay depends on two things: your prefecture's risk zone, and whether your building is wood or non-wood construction. In Tokyo, Kanagawa, Chiba, or Shizuoka, the highest risk zone, non-wood buildings run about 27,500 yen a year per 10 million yen of coverage, while wood buildings run about 41,100 yen. In the lowest risk prefectures, that same coverage runs closer to 7,300 yen for non-wood buildings and 11,200 yen for wood, a gap of well over 3 times, purely based on where the building sits. Within the same address, construction type alone adds roughly 49% to the bill. A wood frame house in Tokyo costs meaningfully more to insure than a concrete condo on the same street. Averaged across the whole country, non-wood buildings run about 11,436 yen a year, wood buildings about 18,232 yen, both per 10 million yen of coverage, before any discount is applied. That base rate isn't necessarily your final rate, though. For separate discount programs exist, each tied to how earthquake-resistant your specific building actually is, and applying for the right one is entirely on you. A seismic isolated building gets 50% off. Earthquake resistance Class 3 also gets 50%, Class 2 gets 30%, Class 1 gets 10%. A certified diagnosis or retrofit adds another possible 10%. These don't stack, you get whichever single discount applies best. There's a simpler fifth option too. Any building completed on or after June 1, 1981 automatically qualifies for a 10% discount. That date isn't arbitrary, it's when Japan's building code adopted its modern seismic standard. One more lever, locking in a 5-year contract instead of renewing annually. The long-term pricing works out to roughly 6% cheaper than paying the same annual premium 5 separate times. There's a tax angle too. Premiums you pay are deductible, up to 50,000 yen, is almost equal to $308, off national income tax, and up to 25,000 yen, is almost equal to $154, off resident tax, filed at tax time. When a quake actually hits, payouts fall into 4 tiers. Total loss pays 100% of your coverage, large half loss pays 60%, small half loss pays 30%, and partial loss pays just 5%. Which tier you land in depends on how much structural damage the building sustained, or how much floor space was destroyed or washed away, assessed against fixed government standards, not negotiated case by case with your insurer. One easy-to-miss exclusion: damage occurring more than 10 days after the earthquake generally isn't covered under that claim, even if it's clearly related. A few other things fall outside the policy entirely: cash, securities, vehicles, and precious metals or jewelry worth more than 300,000 yen is almost equal to $1,847 per item. And critically for investors, this coverage only applies to buildings used for residential living, not offices or factories. An apartment building you rent out to tenants qualifies, because tenants live there. A building used purely as commercial space does not. Despite all of that, adoption keeps climbing. Among people who already carry fire insurance, 70.4% now also attach earthquake coverage. The 22th straight year that figure has risen. But that statistic hides a bigger gap. Counting every household in Japan, not just fire insurance holders, only 35.4% actually carry earthquake insurance. Roughly 2/3 of the country is uninsured against its single biggest natural disaster risk. One more thing changed recently. As of September 2025, insurers have been retiring the old auto-renewal setup and aligning the earthquake policy's term directly with your fire insurance term, 1 to 5 years, moving together. If you bought a policy years ago under the old auto-continuation system, don't assume it still renews the way it used to. Confirm the current setup with your insurer directly, especially before your next fire insurance renewal date arrives. So, worth carrying, or worth skipping? Weigh everything we just walked through against what actually happens to your finances if a major quake hits your area. Run the math and it leans strongly toward carrying it. A government-backed, no-profit margin insurance product, in the world's most earthquake-exposed developed economy, for a few tens of thousands of yen a year in most cases, that's a genuinely favorable trade, even before counting the tax deduction. For foreign property owners specifically, check your building's construction type and completion date before you price anything, since both move the number substantially. Ask about the resistance class discount if you're buying new, and factor the premium into your total holding cost from day one. If you're renting the property out, confirm it still qualifies as residential use under the policy. Next, we're leaving national systems behind and heading city by city, starting with Kyoto, where strict heritage and landscape rules collide with some of the highest buyer demand in the country. Earthquake insurance turns out to be one of the rare cases in Japan where the price is fixed by law, the backing is government grade, and skipping coverage is arguably the riskier financial decision, not the safer one. Subscribe for the rest of this data-driven look at owning and living in Japan, including the city-by-city real estate series starting next.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.